In this Patreon requested video, we're going to take a deep dive at the various high dividend paying Bitcoin ETFs that currently exist. And as you'll see pretty quickly, a lot of these funds are currently offering some pretty insane dividend yields right now. According to the Pew Research Center, roughly 17% of US adults invest in some kind of cryptocurrency. And with Bitcoin recently surpassing the 100K mark, it's been generating even more interest in the asset class. Last year was also the year that Bitcoin ETFs were approved for trading, marking another milestone for this asset class. The goal of this video isn't to speculate on the future of Bitcoin or cryptocurrencies in general, but rather, for those genuinely interested in diversifying into Bitcoin, to compare and contrast the different options that exist for Bitcoin ETFs that pay large dividends. For investors that are bullish on Bitcoin and also want high monthly passive income, these ETFs can be a worthy consideration for your portfolio. They can add even more diversification, and it's a way to have exposure to what's been a very successful investment over the past few years. You might think that all of them have a pretty similar strategy to one another, but the reality is they all function in different ways, with some of them using better strategies than others in my opinion. We'll start by looking at the first and most popular ETF in this category, the ProShares Bitcoin ETF, ticker BITO. According to its prospectus, the fund seeks to achieve its investment objective primarily through managed exposure to Bitcoin futures contracts. BITO does not directly hold Bitcoin. Rather, it holds futures contracts, and as a result, it won't move 100% in sync with the price of Bitcoin. If we compare the performance of Bitcoin side by side with BITO over the past 6 months, you can see that they do kind of move in a similar direction to each other. This ETF uses derivatives on these contracts, and the funds earned from them are temporarily placed in a money market account, which is what all these ETFs do. You can read more about the source of their distributions on their website, but in a nutshell, they're all determined by the gains that are made on futures contracts for that month. It currently offers one of the highest dividend yields out of any Bitcoin ETFs out there at over 60% as of the making of this video. But each month's payouts are going to vary significantly from month to month. Looking at its recent payout history, you'll see that dividend amounts can swing pretty significantly, and it pays more when Bitcoin is soaring. There's some months where BITO might pay very little or even no dividends at all if it's a very bad month for the asset. Overall, if you like Bitcoin and you are optimistic, the performance of BITO should align really well with that. Another dividend ETF that follows a very similar strategy is the NEOS Bitcoin High Income ETF, ticker BTCI. According to its website, this fund seeks to distribute monthly income generated from writing call options on Bitcoin's futures ETFs. You can see in its holdings section on its website that it has the VanEck Bitcoin ETF, US Treasuries where the income generated from those call options are stored before paying out, and then these lines are the call options. There's a couple differences here between this fund and the ProShares one. First, given its covered call strategy, the dividends from the NEOS fund should be more stable. It's only existed since October of last year, but so far it's been pretty smooth as Bitcoin has gone up since then. Comparing BTCI with BITO, you can see that BTCI is clearly more stable from a share price perspective. But a downside is that BTCI offers a much lower dividend yield. It's not even half of what BITO is currently offering. But if you want a sturdier option, then this one would be worth considering. Moving on, the fund managers over at YieldMax also have their own high-yield Bitcoin ETF. The YieldMax Bitcoin Options Income Strategy ETF, ticker YBIT, is a third option that exists. On its website it says, YBIT seeks to generate current income via a synthetic covered call strategy on one or more select US-based Bitcoin ETPs. That stands for Exchange Traded Products, so in other words ETFs. This company YieldMax is well known for their synthetic covered call ETFs. There's a big difference between regular covered call funds and synthetic covered call funds. In YieldMax's own words, a traditional covered call strategy is an investment strategy where an investor sells a call option on an underlying security that it owns. A synthetic covered call strategy is similar to a traditional covered call strategy in that the investor sells a call option that is based on the value of the underlying security. However, in a synthetic covered call strategy, the investor does not own the underlying security, but rather seeks to synthetically replicate 100% of the price movements of the underlying security through the use of various investment instruments. This strategy that's used by YieldMax has resulted in two things for pretty much all of their ETFs. First, the dividends swing significantly from month to month. There's no stability with these payments. They can seemingly just double from one month to the next and then just drop off significantly the next. The good news is that all of their distributions are very high, as YBIT is likely going to be the highest yielding Bitcoin ETF we're going to look at. But look at the horrendous performance of YBIT in 2024. The price of Bitcoin soared by roughly 112% last year, and the share price of YBIT finished the year at a 39.5% loss. Now granted, the fund was just launched in April, But look at the performance late last year. It had very little benefit at all from the huge run-up in Bitcoin that was experienced in November. The reinvested dividends would have helped, but you would have only made a 1.22% total return last year on an investment that returned 112%. Most of that return was in the later part of the year. I think it goes without saying that this is probably the worst option you could go with for this kind of ETF, and I'm not a fan of this strategy that YieldMax is using. There's simply no excuse for this significant underperformance. Now we have the Roundhill Bitcoin Covered Call Strategy ETF, ticker YBTC. This one also uses a synthetic covered call strategy, but it's different than the YieldMax one. The fund purchases and sells a combination of call and put option contracts that utilize a Bitcoin ETF or an index of Bitcoin ETFs. It's actively managed, so they can change their strategy however they see best. So far in comparison with the YieldMax ETF, this one by Roundhill has been a much better performer. Its covered call strategy has been a lot steadier and has provided better upside. Another important feature that sets this ETF in particular apart from all the other ones we've just looked at is that it doesn't pay monthly dividends, it now pays weekly dividends as of a few days ago. The company just very recently switched its payment schedule, likely to entice more income-focused investors. Overall, it's been a much better investment than Bit despite its lower yield. They're still reporting a yield of over 40% as of the making of this video, which isn't bad. Then finally we have Maxi, which is the Simplified Bitcoin Strategy Plus Income ETF. This ETF is by the same company that manages SFAL, which I've covered a few times. Simplified's ETFs can be pretty intricate in terms of the strategies that they use. On its fact sheet it says, it seeks capital gains and income by providing investors with exposure to Bitcoin while simultaneously generating income by selling short-dated put and or call spreads on a variety of equity and fixed income instruments, which may include indices, ETFs, or individual securities. I took a brief look at its prospectus and this fund's page, and I'm going to be honest, this would really require a deeper dive because it's very complicated compared to everything else we've looked at. It has done really well in terms of share price performance, but while looking over this ETF, I noticed it has what's likely the highest expense ratio I've ever seen. This is coming right off of Simplified's website. It says Maxi comes with a gross expense ratio of 6.1%, which is substantial for an ETF. Its dividend payments also appear to be a fixed amount, unlike everything else we've looked at up to this point. I have no idea why it didn't pay anything substantial until July of 2024, and I'm also not knowledgeable yet in terms of how its dividends are determined. So overall, it's a really weird fund, but it's done really well so far at least. They just recently announced a dividend cut, so we'll have to see if that's a continuing trend for it. So that's going to conclude our look at all of the major high-yielding Bitcoin ETFs that currently exist. If I was interested in any of these funds, I would likely lean on the side of caution and go with the NEOS fund. Now, if I was convinced Bitcoin is going to keep soaring and be the best investment in history, I would likely go with BITO or YBTC for those weekly distributions. But this was my first time covering any of these types of investments. If this video stirs enough interest and people want more of this kind of content, then I can keep making more of these. I can go more in depth on any of these funds we've looked at or any other crypto dividend paying ETFs that might exist. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.